Hello everyone, welcome to Elliott Wave Analysis.com YouTube channel. This is Henry. Today is Thursday, April 23rd. The time is 3 a.m. GMT. So today we will be updating the chart of the GDX. This is gold miners, 45 minutes chart here. So let's take a look here what we have. We are looking, as we can see, to end this with 1. So that means we have a rally from the low, in which we're gonna take a look when we zoom out. We have a rally from the low that is ending in a 5 waves, ending with 1 at this point in time. So once that wave 1 is completed, we could see a pullback to correct the entire 5 waves rally. So remember, this is your 3, 4, 5. So the 1 and 2 is not even visible in this short-term chart. But this wave 2, later on, this wave 2 pullback is going to be a larger degree pullback in the GDX, okay, to correct the 5 waves rally. But as always, 5 waves is not something that should be faded, because it can continue to extend as much as it wants. That's by definition 5 waves, an impulse. It can continue to extend, and there is no point in trying to try to pick the top in a 5 waves. All right, so that's why you can see right here, this is not telling, it's not like a red arrow in which we have a bearish sequence or something like that. This is a turning arrow. It's a black turning arrow. What this is suggesting is that this is basically saying that it is quite risky to keep chasing the long side, but this is not saying, okay, it's going to pull back big time, because as you know, a 5 waves can always find ways to keep extending to the upside. Now let's take a look, zooming out a little bit, and then we will be able to know what we can expect in here in the GDX. Now remember this 3, 4, 5, and this is with 1 here. Okay, now if I go to the weekly chart, this is a very interesting thing here. So this is the wave 1 here. This is the one in black that we are talking about here in the 45 minutes. So in the weekly, that's your wave 1, right? So take a look at this from the weekly chart, GDX. We bottom in 2016, January. Now we just recently broke above the previous peak. This is a COVID-19 sell-off here, this thing here. We have already broken above it, right? So you can see this is looking impulsive. This is looking impulsive. This sell-off in the COVID-19 never broke below 2016. So you got only two possibilities here. So we either get a wave 1 or a wave A here, and then this is your wave B or a wave 2, and then you're looking for either a wave C or a wave 3 if you look at it from January 2016. Alright, so the fact that this is 1 and 2, suggesting that it could be either way. It could be A or B, or 1 and 2. It could be 1, 2, 1, 2, or it could be A, B, and this is 1 of C, 2 of C, and then it can resume higher. So if you measure the 100%, if you measure the extension here from January 2016, you will find out that we have not reached the minimum 100%. So in fact, even in the shorter cycle, we can continue to go up. Even in the shorter cycle, we don't need to sell off from here, right? We can continue to go up immediately all the way to 36, right? All the way to 36 to 48, which is the 100% to 161.8% extension. So that's why this is not really saying that this is going to sell off in the near term or something like that. It can continue. It can find ways to extend higher, as we are dealing with the 5 ways up from here. Now, but the weekly chart here at least is giving us an idea that if this is let's say this is an AB, to have a more conservative sort of forecast, right? If this is an A and B, we should be getting at least 36 to 48. That will be in the minimum target here. And therefore, like I said, if you know that the sequence is looking unfinished, so that means any pullback here is not going to be something you want to speculate on happening, because that will be against the clear sort of direction here in the weekly. The direction seems to be unfinished to the upside. At least should be targeting 36. And like I said, this can continue to go up, finding ways to go up and extend and all the way to 36 immediately without having to do this wave 2 pullback. Now if the wave 2 is really going to happen, that wave 2 will be technically correcting this entire rally, right? This entire rally is going to be corrected, so that will be a decent 3 pullback if that happens. Now with the break above this COVID-19 point, that tells us that GDX very strong, gold miners very strong, and look at this. This is a 7-year high. At this current level, this is at the 7-year high. So this is looking pretty good, for the gold investors in general. All right. So that's what we are looking at. Okay. Even though this is what we are calling that we could be ending with 1, that doesn't necessarily mean we really have to sell off. And even if we sell off, that doesn't really mean we have to sell off a big sell off to correct this cycle. What's I think the more important idea here is that we are in the 7-year high. We broke above the COVID-19 high, and also we are still incomplete with the minimum to 36. Now imagine if this is 1 2. If this is 1 2, then it's even, the target is even a lot higher, right? If this is a 1 and 2. So that's why I don't think playing fading of 5 waves or anything like that is recommended in the GDX, even though this is at least is giving us a warning that okay, we need to be a bit careful here in chasing GDX, as the possibility is there that we may be able to count a completed 5 waves from the lows, and therefore get a we can get a bigger pullback before the next leg higher again. Okay, so that's the update for today. Hope you enjoy it. Please do like and subscribe if you like our channel. And as always, I will provide the link to try our service. We have 14 days free trial. The link is provided in the description of the video below. See you all again next time. Have a nice day.